Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video we are going to be discussing the bearish hanging man candlestick pattern. Right now we're just going to consider what the bearish hanging man candlestick pattern is, and we're going to be looking at how to make use of this candlestick pattern effectively. All right, now the bearish hanging man candlestick pattern typically appears after an extended uptrend. All right, and it serves as a warning signal of a potential reversal to the downside. So it means that before you find a bearish hanging man candlestick pattern, most likely there is going to be a preceding bullish trend. Like in this example, we can see that we had a bullish trend, and then just right after the bullish trend, or rather at the conclusion of the bullish trend, we can see that we had a bearish hanging man candlestick pattern form. Okay, I'm just going to describe how to identify a bearish hanging man candlestick pattern. I'm going to describe that shortly. Okay, as we can see here, we have a bearish hanging man candlestick pattern. The pattern has a small real body, all right, a small real body near the top and a long lower wick. All right, the structure is quite unique. Okay, so this formation suggests that sellers pushed the price significantly lower during the session, but we are unable to sustain that pressure by the close. Don't forget that this is the high of the candle, this is the low of the candle. Now this is a bearish candle, right? So this is the open of the candle and this is the close of the candle. All right, so what this means is that during this particular session, the bears were in control, right? At the open of the candle, the bears prevailed. It's possible that the bulls initially took dominance and we had a little rally to this point. That is the high, right? Within the session, at some point, we had a move to the upside, and then eventually the bears dominated this candle and we had a sell all the way down to this point. But before the session concluded, or rather before the candle closed, there was bullish momentum that pushed the price up to this point. But at the end of the day, the candle was still a bearish candle because the bulls could not eliminate the entire downward move. Okay, so this formation suggests that sellers, right, we are in control. Okay, it indicates weakening bullish momentum and the possibility of bearish sentiment taking over. Okay, so we can see this example is a good example on the chart. All right, you're going to notice the small body at the top and the extended lower shadow. Now this pattern usually forms at the peak of an uptrend, like I already said. So you're going to see that this was an uptrend and this is the peak of that uptrend. As you can see, this is the peak of the uptrend before this downtrend began. All right, so how do we interpret this pattern? All right, how do we interpret this pattern? Remember that context is key. Okay, this pattern needs to occur after a strong upward trend, for the pattern to be meaningful. Now the hanging man alone does not guarantee a reversal. Okay, it's important to pay attention to that. The hanging man alone does not guarantee reversal. It is a signal to prepare, not to act impulsively. So combine it with other technical indicators or wait for confirmation from the next candlestick. Now in this example, we can see that the very next candlestick was a doji, right? The next candlestick was a doji. So a doji, which signifies a state of uncertainty, further added to the confidence that a bearish reversal could be imminent. That is the reason why to pay attention to the very next candlestick that forms after the hanging man. This is going because it is going to give you a confirmation as to whether the reversal is going to take place or whether there is going to be further upward movement. All right. So in this case, the doji was indicating a state of uncertainty. So it means that we still have to watch out for what happens next. Okay. So if the candle, the very next candle, closes below the hanging man's real body, it's a stronger indication that a reversal may be in progress. This approach minimizes false signals and improves decision making. Now we're just going to be talking about practical application. Okay, when you spot a hanging man pattern, it's important that you check the trend. It's very, very important. Okay, ensure that it follows a clear upward trend. Right after the clear upward trend, that's when you're going to have the formation of your bearish hanging man candlestick pattern, and then you have to look for confirmation. As you can see, I added the RSI to the chart because you can use RSI for your confirmation, and you can use MACD or volume analysis just to confirm bearish sentiment. Now, as we can see, the RSI was also initially in a bullish trend. You know, there was an increase in bullish momentum, and then at some point around here, we had a breakout to the downside. And as you can see, if we are going to check on the price chart, you will see that right after the breakout happened on the RSI chart, shortly afterwards we had the formation of the hanging man pattern. So the RSI already confirmed this breakdown. The RSI confirmed it, and you can see that the hanging man formed shortly afterwards, showing that this bearish reversal is imminent. Okay, so always pay attention to your confirmation tools. In this case, the RSI was our confirmation tool. All right. And then it's also important to set your plan. Okay, decide on entry, stop loss, and target levels before executing a trade. Okay, for example, once you have identified the hanging man pattern and you have gotten your confirmations, it's important that you begin calculating your potential stop loss and potential take profit level. So now in this case, right, in this case, we can see that we had, let me just remove these horizontal lines. Okay. All right. So we can see that we had, the hanging man pattern here, and we had the doji form here. So if we are waiting for the next candle to close, then we would have waited for the doji to finish forming, right? And then entering a sell around here, setting stop loss somewhere around here. That's about 300. Let's just call it 360 pips, right? 360 pips. And then our potential take profit is going to be around a support zone. So that's about 840 pips, right? So imagine, okay, like even if we decide to close here, yeah, we can decide to close at this very support and then enter somewhere around here, right? After the doji forms, a stop loss around here. So let's calculate this. You're going to be having about 340 or 350 pips. We are risking about 350 pips to make about okay, I'm just going to bring this down a bit because the support zone, we have a significant support zone around here, so I'm going to use this instead. Remember, it's important to have a good risk to reward ratio, and that is exactly what I'm calculating now. So if you are risking $1, your potential profit should be at least $2. So now if I'm risking about 350 pips, my potential profit target should be about 700 pips, and you can see that in this case now I got about 800 pips. Okay, so we have a little over 1 to 2 risk to reward ratio. That's a great one. Okay, so these steps will help you to integrate the hanging man into a broader strategy rather than relying on it as a standalone signal. Okay, so now we're just going to be looking quickly, very, very quickly, on common mistakes. All right, so one thing for you to know is that traders often rush to act on the hanging man without confirmation. Now, this can lead to false assumptions and unnecessary losses. Another mistake is ignoring the broader market context. Remember that no candlestick pattern works in isolation. Okay, always analyze the bigger picture before making your move. Pay attention to the prevailing trend. Pay attention to the prior trend. Okay, what is happening at the moment? All right, before you go ahead to enter your trade. Okay, and now to sum it up, the bearish hanging man candlestick pattern is a powerful tool when used correctly. It provides early clues about market reversals, giving traders the opportunity to adjust their strategies. Okay, so if this video helped you understand the pattern better, don't forget to hit the like button and subscribe to the channel for more valuable trading insights. Drop a comment below and let us know how you use candlestick patterns in your trading. Thank you for watching, and we'll see you in the next video.